Hi everyone, welcome to the Buffett and Beyond Research Stock of the Week, and we're going over SAIA Trucking. And folks, this stock is up over 500% over the past 5 years, and it has just had a correction. So let's take a look at the numbers and make sure they're still good. And remember, if you want to walk on this beach like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. And SAIA, okay, through its wholly owned subsidiaries, provides less than truckload, LTL, transportation services. And LTL refers to shipments of between 10 and 10,000 pounds. And presently it serves 44 states and through third-party partnerships, Canada and Mexico. And folks, this is very, very important here because they just signed an agreement with a Mexican company that does the same thing that SAIA or SAIA does. And so there's a lot, and that's because there's a lot of movement of goods between Mexico and the United States, because Mexico is one of our biggest trading partners. So what happens is SAIA made an agreement with this company in Mexico, and so SAIA drives goods going to Mexico to the border, where this company then picks it up and drives it the rest of the way through Mexico. And the Mexican company does the same thing. It drives all the products that are bound for the United States to the southern border, and that's where SAIA picks up those goods and delivers them throughout the United States. Nice little arrangement there because it moves a lot of goods, folks. Now, it operates a network of 191 facilities, 6,200 tractors, 20,000, almost 21,000 trailers, and has 12,300 employees, 50% of whom are licensed commercial drivers. So pretty nice little company here. Now, let's look at the numbers. The green vertical lines represent SAIA and the numbers, or the statistics, I should say, while the blue lines represent the average stock in the S&P 500. So when we look at the clean surplus return on equity, and think of your bank account. Would you rather put your money in a bank account that's giving you 13.5% or one that's giving you 22%? Or I should say earning 22%. Okay, not much of a contest there. Now, when it comes to net income over the past 5 years, SAIA is really bringing it out, folks. Almost 2.5 times of that of the average stock. Now, let's go over here to revenue. It is returning almost twice as much revenue, or earning twice as much revenue, as the average stock in the S&P 500. But look what percentage it's bringing to the bottom line. So when you look at lines like this versus the average stock, you can see that SAIA is much more of an efficiently operated company, or maybe it's the business that they're in that they're able to charge more. So that's what we're looking at, folks, bringing much more to the bottom line than the average company. So we like that a lot. And let's go to the numbers here. And I want you to see that their net income, which is the clean surplus earnings, in other words, take traditional accounting earnings, you take away non-recurring items and future liabilities, or things that don't have day-to-day, or things that don't make money for the company that's outside the ordinary workings of the company. In other words, it takes out the Mercedes that the owner has, or maybe he's got 3 of them listed under there, or they sold a piece of property where they're actually a trucking company. So things like that. And that's what the net income is. But what I want you to look at is that 2021, $9.48 it was making. Now, next year, 2025, it's expected to make double that, just about double that. Now, we come, and so just remember those numbers. I'll bring them up again. And the clean surplus ROE over 20%. We like that. And you can see down here, it was making money under 20%. Then all of a sudden, it really started cooking in here. And it had a little problem right in 2023. Didn't go up as much as expected because we're coming out of 2022 when the market hit the skids, and therefore the market was afraid to start producing more, or the companies were afraid to start producing more, and therefore the transportation of goods slowed down. So that was the drawdown in 2022 to 2023. So it festered over that line from 2022 to 2023, and now it's right back on track again. Retention rate over here is 100%. That means all the money that the company is making, it puts it back into itself in order to expand. Now, how do we know the expansion is making money? Because that ROE is staying above 20%. We like that. Now, years to pay debt, this is Buffett's rule. In other words, what his rule of thumb is, when the company takes all the money it's making and uses it to pay down its debt, how many years would it take to pay down its debt? His rule of thumb is 5 years. Our rule of thumb is 3 years. And this company, folks, can pay off its debt in 2 months. So actually speaking, it has almost no debt. So interest rates will not worry this company or bother this company. Might bother other companies that are producing things, but it doesn't bother this company as far as any type of bankruptcy or anything like that we have to worry about. Very, very nice in here. And of course, recent dividend is 0 because it's putting all the money it makes back into itself in order to grow. And yes, it's growing, folks. Now, here's the transportation relative, the transportation ETF relative to the S&P 500. S&P 500 is the black line, and this is what I want to show you. The transportation average actually follows the market because the market anticipates, but the transportation average doesn't make money until it actually does the shipping. So that's what we're looking at here. And all of a sudden, the market has taken off in the past several months, but the transportation has declined further because it was worried that we were going into recession. This is when interest rates were going up, and the market was worried. The market corrected in here, and it overcorrected, or we think it overcorrected for the transportation. And now the transportation average seems to be leveling out. And now that interest rates are starting to come down, the market is anticipating that, but the companies have not yet started shipping, and that's what we're looking at with SAIA in here. Now let's take a look at the 1 year growth, and we can see that SAIA was doing very, very well until this latest drawdown in here. So we want to be able to take advantage of this big decline in here, and we're going to show you why in a second, or why we think that now this stock is fairly priced, or even maybe a little bit underpriced. And let us look at SAIA over 5 years. So this is 2024, 23, 22, and this is when the market went down. Transportation went down with the market. And now let's look at 2021. And we could see 2021, this stock averaged, maybe $250 or so. Let's say at the top end, it went over $300 right toward the end of the year when we had the big rally in the stock market. And so think about this, because this company was making $9 a share in here, and now, and it was at $300 a share, or a little under $300 a share, and now, right in here, the company is selling for $400 a share. So if the earnings have doubled from here to here, shouldn't the price have doubled? And yeah, when things were looking very, very well and everybody thought interest rates were going to come down, this stock went up to that $600 level. In other words, doubled the $300 level in here, because it was making $9, a little over $9 here. Now it's making, for 2025, expected to make double that, or $18 a share. So we think this stock is at the bottom of its level right now, and it should be priced somewhere between $500 and $600 as soon as the economy gets going again. And right now, as I'm recording this, and why we're going over this stock now, is because interest rates are starting to come down already. And this past week, we have seen the market rally very, very nice. So let's take a closer look at the candlesticks, and this is SAIA again over the past 6 months, and you can see this big drop in here. Ooh, that's ugly. And now it seems to be leveling out. And now we have an indicator down here that is our intermediate term indicator that we use, and we can see that this indicator has been going down, and now it's very, very oversold And so when this black line crosses the red line to the upside, that gives us a buy signal. So we're looking at this stock trading a little over $400 a share, had been over $600 a share up in here. So folks, we think this stock is getting ready to run as the economy gets better and interest rates come down, and interest rates are coming down this past week. That's why we've had such a beautiful rally over the past couple of weeks. So, folks, we had a pretty good rally over the past couple of weeks, and the market, measured by the Dow, is over 40,000 for the first time in history. So, yeah, the market is having a great rally, and now we'll see what happens because the PPI, Producer Price Index, came out on Thursday, a little lower than expected, and the market is rallying off that. Now all the stocks or all the companies have a better outlook on the economy going forward, which means they'll produce more goods, or there'll be more orders for goods from the retailers, and that will increase the traffic for the transportation industry. And we think SAIA is one of those stocks that's going to really participate very well in the upcoming economic boom that we see coming over the next couple of years. So folks, you go out, you have a good weekend, take your mind off the market. We've had a beautiful rally. Just be with your loved ones, be with your family, have a Sunday dinner. And folks, the market will be back open on Monday, and we'll be right here alongside with you. So folks, stay safe. We'll see you next week.